Have you ever caught a cold that seemed to drag on forever? The kind of cold where your sniffles and coughs persist for weeks? Well, the markets are experiencing just such a cold right now.
The third quarter has ended, and no one was sorry to see it go. In fact, it was the worst quarter for stocks since 2011, with both the Dow and the S&P 500 down 10% or more at some point. This is what's known as a market correction, a 10% drop from a recent peak.
Like a cold, a correction is never pleasant. And like a cold, a correction can drag on for a long time. But that doesn't mean it has to be scary or that we have to overreact to it. If we try to understand it instead, we might be able to fight some of the symptoms along the way.
Even though we can put a man on the moon or find water on Mars, we still don't have a cure for the common cold. That's because there are simply too many viruses that can cause colds, each with different strains, mutations, and variations. The same is true of corrections. There's simply no way to prevent a correction from happening because the root causes are too many, too varied, and too complex.
Actually, you could make the case that both colds and corrections are good things. After all, if we never got sick from the everyday sort of germs, we'd never develop antibodies, rendering ourselves defenseless against the truly nasty bugs that are out there. Similarly, market corrections help prevent bubbles from forming.
For example, if stock prices kept going up and up, far above the value of the actual companies behind them, people would eventually realize they're paying too much money for something that simply isn't worth it. And that's a bubble. And like all bubbles, they eventually pop. The resulting crash is often far worse than a mere market correction. Furthermore, market corrections can be useful for investors because they create opportunities to buy good companies at lower than normal prices.
Scientists think that there are 3 different ways we contract the common cold. The first is through airborne droplets called aerosols. The second and third ways are hand-to-hand and hand-to-surface contact. In other words, by touching someone or something that has the virus on it. As it turns out, there are 3 main sources behind the current market correction we're experiencing. First, China's stock market crash and economic slowdown. Second, falling oil prices. And third, uncertainty over whether the Federal Reserve will raise interest rates or not.
So there you have it. 3 reasons for the market's malaise. But what will happen next? And when will the markets get better? It's impossible to know, of course, just like it's impossible to know exactly when you'll get over a cold. The third quarter is over. The fourth is just beginning. And there are a lot of reasons to believe the year will end on a high note. But even if it doesn't, we'll keep fighting the correction the way we fight the common cold, by sticking to the basics, paying attention, and not overreacting. And by doing that, we can make the symptoms a lot more bearable.
Of course, if you have any questions about the current volatility, how your portfolio is doing, or what the future may hold, please feel free to contact us. We may not be doctors, but that doesn't mean we can't give your portfolio a physical.
So that's all for today. Be sure to follow us on our Facebook page for regular updates. Thanks for stopping by, and we'll talk soon.